The JSE All Share index fell more than 1% in early trade, the second straight session of losses, pressured by a 13% plunge in tech shares, tracking weaknesses in Hong Kong tech giants. Petri Redelinghuys is a trader and founder of Herenya Capital Advisors, joining us as always every Monday to talk about the latest market moves. Petri, good to see you. Let's begin with Moody's. It's now changed the UK's ratings outlook to negative. Why?
Good afternoon, firstly, and I think you just mentioned it just a moment ago. It's the Prime Minister. What's that game we used to play when we were kids? Musical chairs. Prime Minister musical chairs. So I suppose as long as that's going on, it's hard to be confident about the future of the economy. Also, there is a lot of stress in their banking system. We've seen, particularly in the bond market, that essentially government bonds have been pseudo-collapsing. The central bank has intervened in the market, and this is part of the reason Liz Truss is no longer in office, because of some policy missteps. And there's been a lot of pressure, and there's what seems to be a bit of a mortgage, or not necessarily a mortgage, sorry, a pension fund crisis, where pension funds are heavily invested in government bonds. Government bonds are losing value hand over fist very, very quickly. And this is potentially leading to, well, I don't want to be the naysayer or the bearer of too much bad news, but the potential collapse of some of the UK pension funds. So this is not good, essentially. Plus, there's that whole musical chair situation happening with the prime ministers. So it's not looking very rosy at this point. So I suppose a negative outlook does make sense. We'll see again this afternoon what the outcome is and whether or not they can turn the ship around. But well, now it doesn't look like it's the nicest place to be.
So just on the issue of the prime ministers, right, one of the front runners at this point is Rishi Sunak, a former finance minister in the UK. Do you think there'd be better market reaction given the fact that this would be, if indeed he's selected today or this week, this would be a man who has already had experience handling the British purse?
Well, I guess we'll have to wait and see. Initially, when Liz Truss came in, you would have imagined that the market responded quite positively to that, and the market almost didn't react at all. I think now what the market's really looking for is just signs of stability, right? Who gets the prime minister role isn't necessarily as important as to are they going to be able to stabilize the bond market, and how are they going to do that? What we saw from the previous cabinet that I suppose is now vacated, with the prime minister, the finance minister had said, look, what was the message exactly? I'm trying to think of it. They'd given a warning essentially to pension funds to say, you have 3 days to get out of the bad bond positions that you're in. And that, as you can imagine, terrified the market. So we need to start seeing much clearer policy and much stronger wording and much fewer of these silly mistakes to calm the market down a little bit. So I'm not too sure that the market's going to react very positively, either this way or that way, depending on who gets the seat as prime minister. I think they're going to be more focused on, well, what is that first speech going to sound like? What are those first policy changes going to be? What is the first cabinet going to look like? Those are the things I think the market will be more focused on.
Okay, let's look at China, because the economy there has advanced by 3.9% in the third quarter. It picked up from 0.4% growth in the second quarter. The data that was supposed to be released last week, this is what we're dealing with now. What does it say then about the state of the Chinese economy?
So, the data was delayed, firstly. So there's a lot of debate as to whether or not you can trust any of the data that comes from China. This has long been the case that people are distrustful of Chinese economic data, particularly GDP numbers. So the fact that it was delayed, does kind of allude to the fact that it was doctored a little bit before it was released. But I think that it is a good sign, I guess, that there is some economic growth. We have to keep it within the context of we've had 2 years of COVID and lockdown and all sorts of supply chain issues. And we also have to remember that China in itself has been under a much stronger and stricter lockdown for a much longer period than everybody else. And they, in fact, still are on various levels of lockdown in various areas within the country. So seeing a bit of a recovery is not necessarily that surprising, as we are coming off of that low base, as the saying goes, where, when the economies essentially come to a standstill, seeing them get moving again isn't necessarily as much wonderful news as it is just a return to normality to some degree. Okay. So it is encouraging to see that GDP number rise. However, we're seeing, I think you mentioned tech stocks sort of into the intro for this, the tech stocks that are under severe pressure in China. That I think is on the back of what happened this weekend is obviously Xi Jinping has now got his third term as the leader of China, which is, I guess, first. He's going to essentially be leader for 15 years. He's picked a new cabinet, got rid of some of the old ones, and the market seems a little weary and a little upset by the fact that there was this rather drastic sort of shakeup, and one of the sort of leaders in China was also sort of escorted out of the chamber and all sorts of stuff. And there's a lot of speculation as to why that was and what really happened. And the market really doesn't know. So there's just a bit of uncertainty and distrust towards that. So we're seeing a very weak session coming from Chinese markets, and particularly the tech stocks.
Let's talk about Gold Fields announcing a deal to acquire Yamana. It's an all-share transaction, they're saying. What is the game plan ultimately?
So Gold Fields basically feels that Yamana is very well aligned with, strategically with Gold Fields. There's a number of things that they can give Gold Fields, for example, a long pipeline of projects for many years to come. And there's certain things that they can benefit from partnering with Gold Fields, in the sense that Gold Fields are very well experienced at underground mining and that type of stuff, right? So they feel that it's a very good fit for the two companies, for Gold Fields essentially to buy Yamana. And they will be doing an all-share transaction. They've now proposed this transaction. It needs to go to shareholder vote on both Yamana as well as Gold Fields' side. So they put out some dates as to when those meetings will take place and the opportunity to vote on the matter. I guess now we see what happens. The market's response to it hasn't really been the market is green. The stock is up on the day, not massively, about 0.5%. So I guess the market really kind of at this stage looking at it, trying to figure out whether or not there's value there. There is some disagreement between what Gold Fields did with their own due diligence and their own valuation on the business versus what third-party valuators made. So I'm assuming Gold Fields obviously thinks it's worth a bit less than what the Canadian evaluators thought it is worth. I mean, that's the nature of negotiation, I suppose. So we'll see exactly how this turns out. But it seems as though, provided everybody votes yes, this deal will more than likely go through.
Briefly then, as we conclude, according to Status A, total income for the tourist accommodation industry increased some 55.4%. That was in August of this year. How do we make sense of that data, especially as we cast our focus ahead to the festive season? Well,
once again, we have to keep it within context, where we are coming out of this lockdown COVID era where companies' earnings were lower, particularly those of tourists, simply because people could not travel. Now we are in a space where borders are open again, people can travel. South Africa is a very popular destination, so we have been reaping the benefit from that, both locally as well as from international travel. And particularly on the local front, the state of the rand, for example, it might not be possible for us to go overseas for holidays, so we might be more inclined to travel locally. So that, I suppose, is a little bit of good news. The bad news is, even the Americans, for example, last week issued a travel warning, and Germany can't be too pleased with us either, as there has been some incidents of violent crime involving tourists, as well as abductions and all sorts of kidnappings and things like that. So given the fact that some of our biggest clients or customers from the international tourism perspective are issuing travel warnings for people not to come to South Africa because of the high level of crime, it doesn't make me feel all warm and fuzzy on the inside, I'll be very honest with you. However, the reality is we're probably one of the most beautiful places on earth to visit, and we're super cheap to go to if you're coming from a first world economy. So we probably will see a continued uptick in the traveling or travel and entertainment, I guess, category earnings.
Right.
So I think, let's enjoy December. It's coming. And hopefully what we see is a huge amount of pent-up demand for travel. And South Africa, believe it or not, is one of the cheaper destinations out there. So let's hope with a bit of luck we'll be really busy this December.
Petri, good to speak to you as always. Petri Redelinghuys speaking to us this Monday.